Hi, I'm Jimmy. In this video, we're looking at Alibaba's stock, ticker symbol BABA. So we're going to start with the basics of Alibaba's business. Then we're going to jump into the recent news that they're restructuring that business. Then we're going to jump into what is the fair value of Alibaba stock, ultimately trying to answer the question, should we buy it now or do we sell it? The reason I asked, do we sell it, is because Alibaba is actually a stock that I own. Now, I actually bought my shares around $110 per share, but we'll come back to that in a minute. For now, let's look at the basics of Alibaba's business. So this is a pie chart of their revenue according to 2023 estimates. And the interesting part about this breakout of their revenue is that they're actually going to separate their business in a restructuring. So it's going to end up looking a bit more like this. You're going to have individual businesses. Now, just to give a brief rundown of what each one does, the Taobao and Tmall, well, that's their online shopping platform, and they're basically small businesses selling platforms, sort of like an Amazon.com. Then they have their local services. That's things like they have an AMAP, which is similar to like a Google Maps. They have smart logistics business. That is exactly what it sounds like. It manages the logistics portion of their business. Each of these are going to operate independently at some point in the near future. Then they have their global digital businesses. This is something like AliExpress or Alibaba.com, which sells to more of a global audience. Right now, that represents a small amount of their overall revenue, but as you can imagine, there's a lot of upside for that business. Then their digital media business, this does like they have Alibaba Pictures and make movies, music, pictures, things along those lines. This is when they're talking digital media, they're talking like any movie production house, that type of company. Then they have their cloud intelligence business. This is their cloud business. Google has a cloud business. Amazon has AWS. Alibaba has their own version of the cloud business. And again, that's going to be a decent sized business going forward. Right now, there's things like they have AI in there. They have their app called Ding Talk. So they got a decent amount of businesses in a lot of different lines. But the real question is, what are the pros and cons of them restructuring their business? So the way that this is going to work is they're going to restructure right now, Alibaba is the one primary company. If you're going to invest in Alibaba, you're going to buy that. If Alibaba needs to raise money, it has to be Alibaba, the main company. Well, the advantage to that is that they're big. They have a large portion of the market. They have a ton of revenue. They have a lot of cash. But the disadvantage of that is many individual business lines might not get the attention that they deserve. They might not be able to make the speedy decisions that they need to make that many smaller competitors are already making. So some of the advantages of doing their restructuring is they end up with a more agile business. Plus, they end up with more accountability. The accountability is very important. One illustration of that is that if a company were to go out and raise money, well, that company has to now present their own financials. So if a small piece of the business, let's say their cloud business, wants to go out and raise money, or they want to go public, well, they've got to show their own financials. Well, now that management team, it will be a new management team, a new CEO, will be responsible for presenting their own information, for being in charge of their own growth, for all of it. Where it was once part of a much bigger firm, it's now its own entity, which tends to make companies a bit more accountable, and they end up pushing a bit more for growth and better investor experience, let's call it. Then it's important to note that they also become more cost efficient, because as many companies balloon in size, often they end up with wasted costs. Those costs are now much more, they should now be much better once the company starts to spin everything off. Okay, then this brings us to IPOs and external funding. Now, the reason I have this in parentheses after the other three bullet points is that I think that the possibility of them going with their own IPO or raising money externally away from Alibaba itself, I think that's one of the main drivers that makes all of the other three bullet points possible. They're suddenly going to be responsible for their own balance sheets, for their own growth, they're responsible to be their own viable company, and they're going to be held to that standard if they're going to go out and raise any real money. I think that is a huge driver, and ultimately that could be the key to them unlocking better value, which brings us to the better valuation. Most companies, most large companies that have hands in a whole bunch of different industries, like Alibaba does, tend to trade at something known as the conglomerate discount. The bigger they are, the more different industries that they're in, the more the market tends to discount that. By spinning them all off, by spinning off the different businesses, well, you can sometimes unlock that value. Google did it. They turned to Alphabet. They restructured some of their business. They did it a few years back. Their stock jumped. It was like 20% in the first 3 months. General Electric did it. They spun off GE Healthcare. They had a decent jump after they spun off some of those businesses, and they're in the middle of theirs right now. So it's possible down the road that Alibaba is able to unlock some of the value that they haven't realized over the past couple of years. But we'll come back to that in a minute. For now, let's look at some of the problems that restructuring could ultimately cause for a company like Alibaba. And as we can see by the shorter list here, well, I actually think that there's less to downside than there is upside for them restructuring their business. One potential downside is the loss of synergies. Many people are already talking about the fact that if they're all going to act independently, well, right now they've all worked together for so long. Do they start to lose some of the synergies that they've developed? That is a potential problem that the CEO has addressed, and he has claimed that he won't let that happen, that they're all intending to work together. But I do think it's worth listing as a potential problem. Another potential problem is the lower competitive advantage. One advantage to the size of Alibaba is that if you're a small upstart and you have the money and the size and the clout that Alibaba brings to the table. It's like if Amazon went into, pharmacy delivery business, well, it's a thing because Amazon's behind them. If they were their own independent little business, it's not nearly as much of a threat to the industry. So they give up some of that competitive advantage. I think that these are risks that need to be watched going forward, but I don't think they're enough of a risk to slow things down, to prevent them from at least trying the restructure. For now, let's jump over to some of the numbers, and then we'll jump into what the fair value of Alibaba stock could be, and ultimately, do we buy it or sell it? Okay, now about 6 months ago, I actually updated my analysis of Alibaba, and I had a chart similar to this in that video. And basically, this compares Alibaba's actual results, those are the green bars, versus their estimated results. What were expected earnings per share going to be leading into each quarter? And we could see that outside of the second quarter of 2022, well, Alibaba has consistently beat expectations over the past few quarters, which I think is a good thing because over the past year, you can see that there's a dip lower from Q4 to Q2 of 2023 in earnings and revenue as COVID was pushing through China, and China had very strict policies regarding COVID. So Alibaba did have a pullback, but they consistently beat what analysts were expecting for them to do. That being said, let's jump into the fair value calculation for Alibaba's stock. So this is our website, and this is where we're calculating the fair value. Basically, what we do is we take analyst estimates for free cash flow going out the next few years. We discount that back to today. By the way, these estimates are including all of the different businesses because we don't have a real clear timeline as to when they're going to spin off or bring IPOs for each of the individual businesses just yet. They're in the early stages of this announcement, but management has confirmed that the restructuring is happening. So all of these numbers include all of the businesses. And we could see that right now we're getting a fair value of about $205 per share. By the way, these are in US dollars. All these numbers are in US dollars. The stock in the United States is currently trading at about $100 per share. So the stock looks like it has enormous upside. The downfall to that is the stock has looked like it has had upside for a while. There's been certain geopolitical issues that we haven't even spent a lot of time with, but I think that the restructuring could help those geopolitical issues, them being a smaller company after this. Well, those issues have really weighed on the stock. But if we're long-term investors that are willing to buy and hold for the next decade or so, this could shake out to be a really, really good investment. So for me, as far as do I buy or do I sell, I have not added more shares, although I would consider adding more shares to my stock holdings at this time. Right now, like I said, I bought my shares. It's like 109.50 or something. So I'm slightly down on this. So if I were to buy the stock today, I would average down just a little bit. It is something I'm looking at. I do think that the restructuring will help the stock over the long run. So for me, I'm a buyer of Alibaba stock at this price. Now, if you'd like to get access to this website, I will leave a link in the description below as to how to sign up. You get access to this, you join our private investing community, get onto our private live streams, things like that. If you'd like to, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.